This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.
My guest on the show today is William Crossland, President and CEO of Thermal Energy International, Inc. It's a publicly traded company. The symbols are TMG on the TSX Venture and TMG.EF on the OTCQB. Thermal Energy International, Inc. provides energy efficiency and emissions reduction solutions to Fortune 500 and other large multinational companies. The company's value proposition is to help save their customers money by reducing their fuel use and cutting their carbon emissions. Thermal Energy's proprietary and proven solutions can recover up to 80% of energy lost in typical boiler plant and steam system operations while delivering a high return on investment with a short, compelling payback, according to the company's website. As William jokes in the interview, Thermal Energy is a 20-year overnight success story. When he joined the company and took over as CEO in 2009, William's focus was turning a profit, where just before the pandemic was able to accomplish that 30% compounded annual growth rate and $25 million in revenues. While the pandemic was difficult for all of us, the company had to fight through a challenging environment, which we discuss in the interview, but has since started reporting in the last few months more projects and orders coming in. For example, since recording the interview, Thermal Energy announced and I quote here, $3.7 million heat recovery order from one of Europe's largest food and drink producers, end quote, which they put out on December 7th, 2023. In this interview, we also discuss how Thermal Energy works with their multinational client base, their full suite of solutions, and William's 3 to 5 year vision for the company. With that, please enjoy my conversation with William Crossland, President and CEO of Thermal Energy International, Inc.
William, thank you for joining me today. How you doing?
Hello, Robert. Yes, thank you for having me. I'm delighted to be here.
Absolutely. So from here on out, though, I'm going to call you Bill. All right.
Okay.
We established the rules ahead of time.
That's right. Yeah, and I'm calling you Bob. That's,
Very cool. All right. I appreciate that. Well, the reason I invited you on today, in recent months, the company has seen, a little bit of momentum in, not just the stock, but also the company itself, which usually justifies why there's some momentum in the stock. And I wanted to better understand what's going on in the company since we last spoke, I think back in 2021 or something, or maybe early 22, something like that. So, to start us off, this is my first question I ask everybody on here. What would you say is that one line that best describes Thermal Energy International?
So Thermal Energy is a proven, profitable, clean tech company that provides bespoke and proprietary energy efficiency and emission reduction solutions to large multinationals. We like to say we're the profitable path to net zero. And that means we're profitable and we make our customers more profitable because we improve their bottom line by reducing their fuel use and reducing their carbon emissions.
All right, Bill. So then thank you for that nice encapsulation there. A couple lines. It was a couple lines. So let's take a look back at the thermal energy history. When was the company originally founded and what was the thesis for its founding?
So the company was originally founded back in the 90s, the early 90s, actually, and it was founded by the inventor of one of our primary technologies, a FLU-ACE, which is a heat recovery technology. And it operated for many years sort of with the FLU-ACE, but largely as an R&D company almost. I mean, they had that technology and it worked, but they were looking for other ways to try and tweak it and find other applications and other things it could use. And so for the first 15 years of its existence, it lost money every single year, and the company was continually going back to the capital markets and raising more money to fund the losses. I found out about the company, way back in 2007. So a long time ago now, but I love the technology. I thought this is a great technology and it's proven. And I said, look, we don't need to, find another application. We've got a great application. We know it works. We've got sites that are installed. Let's just focus on selling it. And so I took over as CEO in 2009. The prior 5 years before that, the company had lost between $2 and $3 million every single year. And I said, that's it. We're going to make this company profitable. We're not going to raise capital again unless it's for an accretive acquisition. We're not going to fund losses. And we grew the company from about $1 million in revenue in 2007 when I joined the board and invested in the company to right up just before the pandemic of $25 million in revenue. So just before the pandemic, we had 30% compound annual growth rate, $25 million in revenue, $3 million in EBITDA, and almost $2 million in net after-tax net income. So we were profitable and we were growing well. Then the pandemic was difficult because a lot of what we do requires a lot of travel, a lot of site visits. So a lot of our customers and most of our customers are major multinational companies. A lot of them were so focused on the pandemic and how to try to deal with it, they weren't that interested in energy efficiency. We knew the market would come back eventually, so we didn't scale down, we didn't reduce staff. We were profitable through most of the pandemic, but revenues were much lower. We knew the market would come back, and now the market is coming back, and we wanted to be ready to hit the ground running, and we were. So just over the last 12 months, our order intake is 100% higher than it was at this time last year for the 12 months. The number of projects we're developing for customers is 100% higher than it was at this time last year. So that's the momentum that you talked about a bit, Bob. And we've had the last few months we've had some good orders that have been announced, and we've seen some good momentum in the business and in the stock.
Absolutely. So we'll get into all of that in a second, but I want to now take a couple minutes here for those that aren't familiar with your actual products. Can you describe them a little bit, how you work with multinationals, and just the kind of the full suite of services to better understand how you're helping these companies become more energy efficient?
Yes, absolutely. So first of all, I mentioned the company, the genesis. So your question was the history. It started with the Fluay. So that was the first technology. Since then, we've added to the suite. We now have 10 complementary technologies that all 10 of which deal with thermal energy efficiency at the industrial level. When I say thermal, I'm talking about heat. And so it's good for people to understand, because often when people hear about energy efficiency, they think electricity. And in a residential side or a commercial side, about 50% of the energy is electricity. But on an industrial side, 10% is electricity. 90% of the energy they use is thermal energy. So it's usually a fuel that they're burning. Could be biomass, but more often than not, it's natural gas. And so we help them save energy on that 90% that is coming from thermal energy. They're only on average, about 50% efficient. And by using all of our technologies in a bespoke project, we can get it up to 90% efficient. We can save 90% of that 40, 80% of that 40. And so that's basically what we do. But you said, how do we deal with our customers? Everything we do, I mentioned, is sort of bespoke. It's a project. We're not bid to spec. Generally, 90% of our business, we're working on a sole source basis with our customers, in partnership with our customers, to deliver a project that meets both their investment hurdle rates and meets their carbon emission reduction targets.
Absolutely. And how would you say your suite of services that are helping these companies reduce their thermal energy or becoming more thermal energy efficient, how are they unique and different compared to some of your peers that are also out there? I would imagine you have competition, right?
Well, what is competition? I say sometimes I get in trouble when I say we don't have competition. We don't have competition to the extent we don't very often directly compete with anybody, because we're working on a sole source basis. Is there other companies out there that might have something similar to us? There's always somebody that's got what's the next closest thing to the technology? And there is a few companies out there that have some of our technologies, but they all usually only have one technology. And the other thing that we haven't found anybody that does yet, that has the unique capability to engineer and implement projects with proprietary technologies. So the usual way these products are sold is just a piece of equipment. And then you got to find the engineering to sort of develop the project. You got to find the contractor to install it. What we do that's different, and we haven't found anybody else that does it, is number one, have the whole suite of technologies. We don't know anybody else that has the whole suite of technologies that we have. And number two, the ability to do a total turnkey project. So to deliver to the customer a fixed price with guaranteed savings. We don't know anybody else that does that. The customer's alternative is, if usually when we're pitching them, they're not aware of the technology, so they're not out there looking for it. Like I said, it's not bid to spec. We come to them with the solution, and their alternative is either work with us, or they can hire an engineering company to try and develop the project, then try and source the equipment, then find a contractor to install it. Multiple points of contact, multiple points of responsibility. We wrap that all up with a single point of responsibility. That's why they love us, right? We get, at the end of the day, we get projects done quickly and efficiently. So we'll have the project installed by the time they could have it sort of developed by somebody else.
Absolutely. So can you go through the business model a little bit? So is it, you do project based, and then is there a recurring, where, something for maintenance or something like that? Or is it project based and then like, all right, next project?
Yeah, it is. Unfortunately, that's sort of one of the challenges maybe with the business. It is project based. Some investors have said, well, geez, why did you make the equipment so well? Can't you have it break down a little bit more frequently? But, it is, they are, solid, stainless steel. They, one of the advantages we bring is reliability. So unfortunately, we do some maintenance. Some customers will have us come, once a year to sort of tune it up, make sure it's still running. But if we do, say, $1 million project, the maintenance on that project would be sort of $10,000 a year. So it's a service we offer, but it's not the main part of it. But we do have what we call reoccurring. So it's not recurring revenue, it's reoccurring revenue. And that's really projects. So we focus on very large multinational companies. Strategically, that's our intention. Number one, because it's the very large multinational companies that tend to have the very large sites that use a lot of energy. So we want to go to as big a site as possible. If we can save them 20% of their energy bill, we want that energy bill to be as big as possible because the project will be as big as possible. So it's the large multinationals that tend to have the very large sites, and they have hundreds of sites around the world. So as an example, our top 10 customers have 1,000 sites around the world. And so our goal is to move from site to site and do multiple projects for the same customer.
I was just going to say, like, that you kind of just gave a nice kind of, I guess you say, snapshot as to what the total addressable market is. Because even if it's project to project, it sounds like, all right, maybe project to project, but I got one multinationals, like you just said, thousands of sites, right?
Yeah.
So, I mean, talk about the pipe. I mean, that I know on your website you have, various verticals that you are focused on, but I mean, it seems like all the different opportunities out there, it's kind of endless, I mean, all different industrial sites, all that kind of stuff.
It is. I mean, the addressable market is a ridiculous number because it's basically almost every industry.
I don't even want to ask because I know it's going to be a crazy
billion. It's going to be billions and billions and billions
of
dollars. Yeah. So our existing customers, we talk about the top 10 customers. 60% of our revenue over the last 5 years has come from our top 10 customers. We've probably only done 5% penetrated with those customers. It's a huge number because, as I said, industry, represents about a third of the energy used in the economy, and industry and 90% of that energy that the industry is using is thermal, and they're only using it at 50% efficiency. So, but it isn't every industry. I mean, it's almost every industry that works for us. But the challenge, for us is if energy is lost somewhere in the system, it's because of heat. They're losing heat somewhere. That's what energy can either do work or it can be, heat. So they're losing heat somewhere. So what we do is help them lose less heat. But sometimes when you're doing a heat recovery, you got to find where are they losing heat and where can they use that heat? Where's the heat source? Where's the heat sink? Where are we going to put that heat? And that's really what we do. We wrap that all up. So often what the limiting factor is they're wasting a lot more than they can actually use. So there's some industries, as an example, even though they are very energy intensive, they aren't as great for us. It's things like steel or cement, both using enormous amounts of energy, but they have nothing to use that waste heat for. The industries that are great for us is basically almost every other industry, but a lot of food and beverage. When you think about it, food and beverage has a need for heat to cook, to sterilize, to clean, to wash. So food and beverage is a big sector for us. Pharmaceutical is a big sector for us. Tires are a big sector. Plastic and rubber is a big sector. They have heat and they have a need for a use for that heat. Some hospitals and universities, big sites, have a need for heat. So it's not every industry, but it's almost every industry that could use our services.
I gotta ask. I mean, you mentioned, when we think about the competitive landscape and whatnot, how there isn't a direct competitor, but it's mostly because there isn't anyone else that's doing kind of the full suite of both providing the product as well as then implementing it. Making sure it's working properly. Yep. You have the engineering expertise to put it together. And it makes sense why a customer would want that. Like, all right, I just have to go to you. You give me everything good. Why isn't there other, larger or just any other companies in general doing that same kind of model? How come it is just you? seems confusing when you talk about the market opportunity.
It is. I'm not sure. I mean, maybe I think that will evolve. I think there will be more companies getting into this space, and that's part of our, our long-term goal. I think we basically acquire or be acquired type model. I think there's going to be a lot more. And in the industrial sector, there is, interestingly, in the institutional side, in the government side, you have ESCOs. You have ESCOs that will put these projects together and then sort of finance it. But on the industrial side, the ESCO model doesn't really work because the industrials usually want to do the projects themselves or have someone do the project for them. They're not wanting to outsource the whole amount. But I think we will see more and more of that, come along because, our industrial customers will tell us, they have very aggressive carbon emission reduction targets. We do a lot of food and beverage, a lot of pharmaceutical. They're selling to the end user. They've advertised it to their customers. They've advertised their carbon emission reduction to their shareholders. They have to meet those goals. And they will also tell us that the electricity side is quite easy. They can buy green electricity off the grid, but the thermal side is much more challenging. And that's 90% of their load. So they have a challenge there. And we're helping them address that, and so that's why we're seeing the great growth right now in orders. Now that they're very interested in meeting those carbon emission reduction goals. Most people have a sort of a 2030 goal, and then either a 2040 or 2050 goal. And 2030 is getting close. They only have 6 more years before they hit 2030, so they're wanting to move quickly, and we are the fastest and easiest way for them to get those projects done.
I mean, I have so many different rabbit holes to go down here because, it seems like, look, thermal energy, we're recording this on December 5th, 2023, despite there, being momentum in the company and, more orders, the backlog, I think, correct me if I'm wrong, is at about 40 million, right?
22. No, 22. 22. It was 22 at the end of our first quarter.
I apologize. Yeah. Okay. I'm reading it right here. Yes, you're right. So the backlog is 22 million. It just seemed, I'm confused, right? Like, I'm sure you get this a lot from other investors. Like, there's clearly a mandate out there from industrial, food, and like all these different industries that need to just reduce carbon emissions. And like, I would think, help me. Because I'm on one hand, it's like, the backlog is great, right? Like, 22 million, that's nothing to sniff at, but you would think like, all right, everyone's jumping on board. Is it because they see like, all right, thermal energy, like, okay, they've been in this for a while, but smaller company, we want to make sure that they can handle capacity. Like, catch me up,
Yeah. So it's
you know what I'm saying?
The challenge is, listen, it's an advantage that we can provide these bespoke, customized, total turnkey projects. The disadvantage is every site is different. And so, we have to find the heat source, we have to find the heat sink, and how close the heat source and the heat sinks are, that can affect the profitability of the project quite significantly. If they're very close, that's cheap. If they're a long way away, that's more expensive. So even when we have, our model with a lot of our industrial companies is we'll go to a site and we'll get the heat from a certain application. Then we'll say, okay, what other sites do you have that application? We still have to develop the projects at each individual site. So every site is a little bit different in the layout. Every site's a little bit different in terms of their fuel cost. So, even though they know it works, it still takes time to develop those sites and find the next best site. And that's why the thermal energy part is a little bit more challenging. But that's, we're playing into that. That's to our benefit because we have the expertise. Right. So we are ramping it up, but we have seen that. That's part of our growth strategy going forward as well, is that, historically, and this is probably, maybe 4 or 5 years ago, we would sell, a big site in North America, and we would go to another site in Europe with the same company, and they would say, oh yeah, but our steam is different, our site is different, and we'd have to start selling over and over again at the site level. And the site made the decisions, and it was out of the site's budget that the project came. More and more, what we're seeing now is it's not out of the site budget because at the corporate level, they have carbon emission reduction targets that they have to meet. So they've allocated budget at the corporate level. And now we still have to sell a little, we still have to convince the site that it's going to work. But now you've got the corporate guy saying, let's do a project, and he's providing the money. And so that speeds it up a little bit. So last year, for the first time ever, and this was for our GEM technology, which is a steam trap. Typically, the GEM orders are anywhere from 50 to a couple $100,000 per order, because it's a little bit simpler application than, say, the Fluace. We got an order. We've got on two different cases, and we got an order last fall for 27 sites all at once. And so again, you can't do that without the coordination at the corporate level, saying, okay, this is a technology we want to get behind, and where are the sites to do it, and and then roll it out. And then we got another site, another order from a different company, and I think it was 12 different sites. So that's what we're trying to push going forward. We're trying to accelerate, those sites, so that we don't have to, do one site and then wait for it to start up and then go to the next site and start pitching them. We want to accelerate that sales cycle as best we can by operating at the corporate level and finding corporate champions.
Absolutely. I think that answered my question pretty much right there. Because, it's also one of your barriers to entry, I would argue, right? Is that, you come in with the experience, maybe there might be a startup that would want to come in and do this, but they don't realize that, okay, each site is different. You got to find the source of the heat. And what does the ideal heat source look like on any given site where you're like, all right, cha-ching, this is a good one.
Yeah, heat is heat. It doesn't really matter. It doesn't really
You know what
matter.
I'm saying, though, right? Like you said, there's the more expensive the source over there versus here.
Well, it's anywhere. If there's heat, they're using natural gas. So the perfect site is somewhere that has a high natural gas cost. So that's part of our strategy, is focusing more on Europe. It has been for the last couple of years, but we focus more on Europe because the energy prices are 2 or 3 times higher, and their carbon emission reductions are that much more aggressive. Having said that, North America continues to grow just as it, to keep pace with Europe. But the ideal site is where there's lots of heat source. There's always lots of heat source where there's lots of heat sink. So where can they use that? And they have a high energy cost, because then we can do a nice big project with a nice, fast return on investment, strong return on investment for our customer, save them lots of energy. But the heat sources, often it's a natural gas fired boiler, but it could also be an oven, or it could be a dryer. Again, ovens, dryers, that's why you sort of get into the food and beverage side. But most of our projects are often a natural gas fired boiler or a biomass fired boiler.
Got it. So not to jump around a little bit, but we talked a little. You mentioned how right before COVID, the company was performing as it was. I think you said for that fiscal year, 25 million, and then all back, and then COVID happened, and then now your things. What would you say was the inflection point that resulted then in the return of some demand post COVID for thermal energy?
Yeah, so it was really interesting because we sell our projects. We have technologies. We have 10 different technologies, and we sell those solutions 2 different ways. One is a turnkey project, and that's pre-COVID. That was the main way we did it. So that was about 70% of our revenue. But the other 30% was smaller, simpler projects where the customer just wanted the technology. They would usually install it themselves, because there isn't every project isn't a heat recovery. So the steam traps stop them from losing heat. So those ones tend to be easier to install. So we call it custom equipment turnkey solutions. So pre-COVID, when we had $25 million in revenue, 70% of it was turnkey, 30% was custom equipment. What happened during the pandemic is the custom equipment doesn't require the same level of site visits, doesn't require our presence on site as much, doesn't require as much travel. So we had grown at about 30% compounded annually right to the pandemic. Throughout the pandemic, the custom equipment side continued to grow at 30%. But the turnkey fell off a cliff. It basically dried up to zero for a little while, because we were ordered off site. Even projects that were midway through implementation, we were ordered off site for those first sort of 6 months of the pandemic. And any other big projects that we were developing, you sort of have to, if it gets stalled, if a year or 2 goes by, you get to sort of have to start again from the beginning, because those big turnkey projects are usually developed with the customer under what we call a project development agreement. So the sales pitch, the sales process sort of goes something like this. We'll go to the site. We know what types of site can use our services. We'll go to the site. After doing a little bit of analysis, we'll go back to them with a value proposition. We'll say, look, we think we can save you $1 million on your fuel bill with a project, and the project will cost you $2 million. Is that something you'd like to do? They say, yeah, that sounds great. 2 or 3 year payback would be perfect for us. And we say, well, we haven't done all the detailed engineering. That's not a fixed price, but I'll tell you what, sign a project development agreement with us. We'll go away and do all the detailed engineering. And if we don't, if we come back to you with a project that meets your criteria, and we agree on what the criteria is up front, maybe it's a 2 year payback, 3 year payback, 4 year payback, whatever it is, you have to do the project with us. That's a project development agreement. And so what we saw is the project development, the turnkey projects dropped during the pandemic and stayed low. And then about a year and a half ago, the number of project development agreements that customers were signing was going up pretty significantly. So for the last 12 months ending after our first quarter, project development agreements that we had signed with customers was 100% higher than it was the previous 12 months, and about 300% higher than it was a couple years earlier, 2 or 3 years earlier. So that's when we saw it building. We knew that those were going to come in as turnkey solutions projects. Now, every project development agreement doesn't result in a project. Sometimes we miss the boat a little bit, but most of them do. And so that was really where we saw it. And that probably happened about a year ago now, where we really saw the ramp up in project development agreements. And then you go back, we turned profitable in third quarter last year. So that was the quarter ending in February. And then we've been profitable ever since. So that was the turning point. But where we saw the business coming back is when the orders started coming in. But we saw that ahead of time with the signing of project development agreements being at all-time highs.
So what's the historical project development agreement conversion rate?
Between 50 and 75%. So
I saw that written out somewhere, but I wanted you to say
it's a little bit higher than that, but I don't want to be held to that number. So it's it's probably at the upper end of that range, but yeah, we don't do project development agreements, and I tell the sales team this all the time. We're not selling project development agreements, even though we make a little bit of money on them. We don't want just a project development agreement, so it has to meet the hurdle. We screen them. We only do project development agreements where we really think there's a valuable project there, and the customer is going to do it. So that's why most of them result in a project. On an average, about a year after. Some are faster, some are slower, but on average, it's about 12 months after we sign the project development agreement, it will get an order for the whole project.
Got it. So this might be a silly question, but I don't care. I like asking silly questions every once in a while. How's thermal energy not been scooped up or picked up in ESG circles? I mean, I know maybe some folks don't really pay attention so much to ESG right now, but there are still folks that are. So I mean, thermal energy is kind of your company is kind of right there, right?
Yeah.
Clean tech, all that. So I'm just curious.
Well, it's when you think about it, I mentioned to you that the history of the company for many, many years was sort of overpromise, underdeliver. We continually had losses. So when I took over and I was a shareholder, I said, we're not selling shares. We're not going to raise capital. And I want to prove the story. So I don't want to really go out and start telling the story. So we kept until we had a good track record to show to people. And so when did that happen? I talked about the 12 months ending February 29, 2020, just before the pandemic, we had a 30% growth rate. So in January of 2020, I said, okay, we got a great track record. We're profitable now. Let's make sure people know about the story. So in January and February, we started a little bit of more investor relations activity. January and February of 2020, a little bit more investor relations activity. And then what happened? So we cut that cost because, to survive the pandemic, we had to, cut all discretionary spending. And then we started up again. I'm losing track of the years now. Whenever an Omicron was that 2021? We did a little bit more in 2021, and then because we thought we were coming out of the pandemic, and Omicron hit, so we stopped it again. And then we just started ramping it up again, as I said, when we saw the order starting to come in, when we knew we were out of this, and it was going to be, we were going to be growing from here. So that was sort of June of this year. Is really when we started ramping up our investor relations again. So I think, I think it's a lot of people don't know the story because we haven't, quite frankly, been out there telling the story because, we wanted to have a really good story to tell. And I believe we do now. So we're there for the long haul now. We don't think we're not looking back now. We're out there and we're trying to make people more aware of the story because I think it's a great story.
Yeah, I mean, look at you. You're here talking to me, right?
That's right. Yeah, exactly.
So, all right. So, you kind of answered my question a little bit earlier about, when investors maybe get confused about the most when, maybe after having a one-on-one with you. But is there anything else maybe that we're missing? Maybe some other frequently asked questions that you get from investors now that you're kind of starting to do the dog and pony show again that maybe we can address here?
Yeah, I mean, it's still, the business is becoming much less lumpy, but we're still a business with, big projects. So we're running on an LTM basis. We're about $23 million in revenue now. We can do projects that are, $2, $3, $4 million. So a big project can be a big chunk of revenue. And as a result, the results on a quarterly basis can be a little bit lumpy. So you really got to look at the company on a longer term basis. And so I often ask people, just focus on the LTM. We can have a great quarter because it just happened to be, we had to finish a project, then we were able to book all the revenue from one big quarter, and then it'll be down the next quarter. But that's not because the business is worse the next quarter. It's just the timing of the large projects. So that's one thing I always tell people: look at it over a longer term than a quarter. Don't judge the quarter, each quarter results to indicate a trend. You got to look at a little bit longer term than that.
The fun part about being a public company, right? The quarterly
Yeah,
reporting.
that's right. The
Gotta love that part. So, another question that I ask everybody on here, just playing devil's advocate, in your opinion, what would you say are some of the company's downside risks to achieving some of the goals that you're hoping to get to, not just for this year, but moving forward?
Yeah, the challenge we have always had, and it's less of a challenge now, but it used to be. I mean, you think about it, energy efficiency and carbon emission reduction is not mission critical, right? They can keep running their business. So if there's difficult times, listen, we tend not to be cyclical at all. Because we focus on food and beverage and pharmaceutical, and they're counter cyclical or uncyclical. But if for any reason people decided that reducing carbon is not important anymore, that would obviously be a risk. That would be a risk for us. We still deliver great projects. Whether they're counting on the carbon or not, we're reducing their energy costs, and we're delivering projects with compelling paybacks. But if there isn't that drive, to be more green or reduce carbon, then that would be a risk to us. I don't see that risk in the future, for the foreseeable future, but that would be, if for whatever reason people don't care about reducing carbon anymore, that would reduce a portion of our business for sure.
Very good. And you mentioned that the company is, I think, according to your most recent financial report, is company's profitable. How do you envision maintaining profitability while also still focused on the growth that you're probably hoping to achieve?
Yeah, that's a great question, Bob, because that is a challenge for us. I mean, at the end of the day, we're a business, and we're a technology business. So some companies grow by, building a new plant, which they can capitalize. It doesn't hit their bottom line. We grow by adding people, doing R&D, and developing new projects. That all hits the bottom line immediately. So it is a challenge, but we're pretty prudent. So we do want to continue growing while maintaining profitability. So it's just measured growth. We grow by adding salespeople and engineers, and that's basically what we are, right? If 45% of the company's employees are engineers doing engineering work, 45% are salespeople, many of whom are also engineers, and 10% admin, roughly. So we grow by adding more salespeople and engineers, but they don't pay for themselves for the first couple of years. Often takes them a while to get up to speed. So if we were just to all of a sudden double the sales force and double the engineers, that would hit the bottom line. So we're a little bit more measured. We want to maintain our profitability as well as grow. Having said that, if we wanted to stop growing, we could increase the profitability immediately, right? Just stop adding people, because we add people every year. So stop adding people and the profitability would go up. But of course, that's not in the best long-term interest of the company. So it's really just sort of being measured in your growth.
I mean, do you feel that at this stage you can be selective on the projects you take, or are you kind of also in that stage of like, all right, multinationals coming to us, it's just like, okay, we have this, yes, like you're in that mode still?
It depends on the customer, actually. So, we have some very good customers which are very loyal to us. And we'll largely do, if they want us to do something, we'll probably do it. But if there's other customers, if it's an iffy project, no, we have to be very selective. We are selective. Like I said, we don't want to do, one of my favorite sayings is, the demand for free engineering is unlimited. So people always want us to do, develop a project for them. Why not, if it doesn't cost them anything? But that's not our business. So we have to be selective. And even though we make a little bit of money and they pay us for the project development agreements, that's not our business. And so we are very selective in those projects. We only do project development agreements that we think are going to turn into good projects for us and for the customer.
Very
So
good.
yeah, we do have to. I mean, that's more and more so now. You know, a few years ago, less so, but now, given the activity, given the interest, given all the projects we're working on, we have to be selective.
So I'm gonna ask you a question. You don't have to answer this if you want, because I know that you're president, CEO. I'm assuming what just so that people know, like, how much do you own of the business?
Not much,
Okay.
but a significant amount for me. So at almost 7 million shares. I'm probably the second largest shareholder. But almost all of that has been purchased in the open market. So I mentioned to you the company, and the technologies that virtually all the technologies that we own now were founded back 30 years ago at least. So those founders are all gone. So we have a professional management team, a professional board. All the shares that are owned by both board and management were purchased in the open market with their own funds. I have a few options that I exercise, but the majority of the shares I just purchased in the open market. So the management and the board don't own a lot. It's getting close to 10%, but everything, like I said, everything that they do own wasn't gifted to them, it was all purchased. So I believe in it. It's a meaningful investment for me. So
Absolutely. And that gets to my question in that, what does I'm not saying that the goal is to get to this point and then get acquired. I'm just assuming you're trying to, you want to build this for the long term, be around for 3 to 5 years, continue to grow and grow and grow. But I mean, we've seen a lot of takeovers recently for Canadian tech microcaps right now. What does a potential acquirer look like even for thermal energy?
It's hard to say. I mean, there is companies that are starting to show like that, but right now there isn't a big company that we're aware of that's doing exactly what we're doing. But there's more and more companies are getting into the field. So it would be some traditional energy efficiency type companies that are operating. A lot of them are out of Europe. So it would be like an ESCO like type business. And so that's why I say but I also think we have spent a lot of time looking at what's out there, because we see these other, over the years, we've seen other technologies that are similar to us. We sort of see them in the marketplace. And so we spent a lot of time trying to get to know those companies, and we were surprised most of them are smaller than us. But there is a few companies out there that are starting to get into this sector, and it's really anybody that's doing energy efficiency projects at an industrial level rather than an institutional or residential.
Very good. All right, my final question for you today, because you've answered all of them. I really do appreciate that. So, my final question is, in your opinion, where do you see the company in 3 to 5 years? Where would you like to see it in 3 to 5 years? And what would you say are some of the inflection points that'll get you there?
I'm a little bit boring. It's just continue growing the way we have in the past. I think we've proven ourselves we can grow very effectively on an organic basis. So to me, in 3 to 5 years, it would be we continue to grow organically at that 20 to 30% compounded annually every year, and we have a few more acquisitions, a couple more acquisitions done, and we're a much bigger company. There isn't really an inflection point because we've got a proven strategy. We've proven it. We just want to execute it now. So just keep doing what we've been doing, what we proved we could do for those 5 years from 2015 to 2020. Just take off, continue on where we left off and continue growing from there. We're almost now, as I said, we're almost back to that $25 million in revenue. Our LTM is 23 million. Our LTM EBITDA is 2.4 million. Our LTM net income is 1.4 million. So we're almost back there. We just want to keep going. So it's basically more of the same. Continue growing aggressively organically and do a couple more acquisitions do an acquisition every couple of years.
Very good. All right. Well, Bill, with that, where can our audience go and find more information on Thermal Energy International?
Of course, www.thermalenergy.com is the place to go for sure.
Awesome. Bill, thank you so much for joining me today. I really do appreciate it. Good luck, stay safe, and I look forward to our next update.
Thanks so much, Bob. It's been a pleasure.
Thank you. This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.